Okay, so we are now live. And welcome everybody to today's webinar on international business intelligence and credit checks with Sean Haywood of Graydon UK Limited. Graydon are specialists in business intelligence and are going to take us through some very interesting aspects of assessing and eliminating risk in international trade. Now, for those of you who may not have seen us before, eBSI is an international trade school specializing in international trade, trade finance, and supply chain management training, accredited by the Institute of Export in the UK. And now we are partnering with the Institute of Supply Chain Management in logistics and SCM courses. The basic structure of our courses are along the lines of multimedia training delivered online through our online training portal, coupled with an online campus where participants are able to integrate and work together through the various course modules. We then provide online assessments, which are then obviously leading towards the certification. And then we give opportunities for participants to be able to network and build business relationships throughout the program with the participants from well over 70 countries around the world now at this stage. Again, this all leads to international certifications, including those from the Institute of Export and our own private certification from Export Academy, and of course ICC certificates for our trade finance programs. The International Trade Specialist Accreditation, which many of you are probably doing at the moment, is structured along 4 key areas. First of all is export marketing, which gives us an overview of how to identify foreign markets, how to plan our entry into those markets, and to identify distribution channels within those markets. Then we have our Trade and Customs Practice module, which covers the whole mechanics of international trade, including international logistics, how to negotiate your contracts, in international contracts, applying Incoterms 2010, of course, and customs procedures, which is of course an essential element for all trade transactions. Then of course we have to get paid and finance the transaction, and so we then use our trade finance module, which is also actually supported by the International Finance Corporation through the IFC FIT initiative. And we have well over 800 graduates of that finance program now from about 10 countries around the world. And of course this is finally complemented with an e-business module, which is basically applying internet technologies to facilitate international trade. So if anyone out there hasn't or isn't doing the program yet and would like to know more, you're more than welcome to contact me at the contact details on the screen here now. But I want to focus on the primary topic of today, which is going to be the International Business Intelligence webinar. So I am going to pass the command or the control of the webinar over to Sean Haywood now, and I will be very happy to listen to all the information he is going to be presenting. One thing, if anybody has any questions as they go through the webinar, please email info@ebsi.ie, similar to the email on the screen at the moment, and we will check the questions at the end of the webinar, and Sean will be able to address any questions that arise. So again, once again, I welcome Sean Haywood to the webinar, and I am passing you now to the to be able to present to everyone. 1 second now, Sean.
Good afternoon, everybody. This is Sean Hayward from Grading UK Limited. Thank you very much for your time. For those of you in different time zones, good morning, good afternoon, good evening. Thank you very much for attending. And as I say, today we're going to be talking about understanding and managing the risks of international trade. And as Thomas mentioned earlier, the email address to send any questions to can be seen here on this screen, info@ebsi.ie. Also, if you're interested, we have a free ebook on mitigating the risk of trading abroad, which can be downloaded from www.graden.co.uk. Very quickly, some background about myself. I'm the International Key Account Manager at Graden UK, where I've worked for the last 16 years. I have 27 years experience of working for some of the UK's leading credit reference agencies. I'm a member of the Federation of Business Information Services and also the Finance, Credit and International Business, FCIB. Graden is one of the UK and Europe's leading credit information providers and business intelligence. Our core aim is to help businesses like yourselves minimise risk when dealing with both customers and suppliers across the world. We have an online database that can give you valuable insight into over 220 million companies internationally. What I'd like to do, if I may, is just very briefly take a look back a few years at what the expectations were in 2010 for the future in 2014, which of course now with hindsight we can look back at a lot better. The 2008 financial crisis had led a lot of companies in the West to thinking the following: that the European economy would be fully recovering by now, that the emerging BRIC and Mint economies, Brazil, Russia, India, China, Malaysia, Indonesia, Nigeria and Turkey, that these economies would be the answer to everybody's exporting woes, that these would be the countries that would come to the fore and take their place at the head of the world trade. And also that Asia would be a major agent for economic growth. So as I say, the expectation was a stronger Europe, emerging BRIC and Mints, and Asia taking its place at the head. The reality? Well, actually, for Europe, the economy was slightly more stagnant than expected. In fact, in 2014, the growth for the European economy was a magnificent 0.02%. It hardly grew at all. Now, interestingly, when we first looked at this back in October, November last year, that was the reality, that was the forecast. Since then, the euro has dropped dramatically in value against the US dollar, showing the volatility of the world markets still. As the dollar gets stronger, the euro gets weaker, and perversely, a weak euro can actually help the European economy, because it will start making their exports so much cheaper and so much more attractive to the rest of the world. So this time next year, that growth figure could actually be growing somewhat. Although the general belief is that the growth figures of 5% that we used to enjoy 10 years ago are now a thing of the past and will not be happening. Please excuse me. And with regards to the BRICS, actually, the growth never came. The expectations did not happen. Brazil, we know, is they just had a new election. The same prime minister came in. However, the Brazilian economy is not growing. Russia, it's pretty obvious to all that with the actions of Mr. Putin and the drop in oil prices, the Russian economy is very, very dependent on exporting raw materials, and it's struggling with that. India is actually showing signs of taking off and could well be one of the growth one of the growth countries out of this region. China had on paper a very, very impressive 7% growth last year. Unfortunately for China, it needs 6% just to stand still because of the size of its population. So 7% is actually close to sort of recessionary figures. And with regards to Mexico, Indonesia, Nigeria and Turkey, Nigeria, like Russia, is struggling with the falling oil prices. Turkey is suffering very much with the situation going on in Syria on its borders. Indonesia is still showing fairly healthy signs of growth, and Mexico, actually, the government is showing really, really good intent at getting hold of the drug cartels there. And if they manage that, there's great hope that the Mexican economy will actually take off. And Asia actually turned out to be far more dependent on a strong West than we first realised. And what I'd like to say by that is the expectation was that when the Western economy stopped down, that people would expect more exports from Asia and more growth in the Asian region. What actually happened was it has become apparent that the internal requirement for Asian goods within Asia is not as great as they hoped it would be, and they actually need the West to import their goods. The West is still the market for Asian goods to be exported to, and at the moment the consumer in the West is still a little bit fearful of spending money. So at the moment Asia is still waiting on the West's recovery. There is some good news though, especially for us here in the UK. The IMF identified us as one of the top performers in the world leading economies in 2014, and our government is actually committed to increasing annual exports to 1 trillion by 2020. And this is going to be aided by the UK Export Fund, who've actually put aside 3 billion to assist UK exporters. So if we've got any UK exporters listening out there, please do approach the UKEF and discuss the possibility of getting some funding from them, because the government is very much committed to helping you export your goods. So now, you want to trade abroad. And of course, for anybody trading abroad, it's a new market. It's going to be different languages, different currencies, and a business culture that could be completely different to the one that you're used to. All of this adds up to potentially dealing with risky business. I speak from experience on this one. Know your prospect country's business culture. One of the things that I've learned from travelling around the world, dealing with agencies across Asia, America, Europe, the Middle East, one size does not fit all when it comes to culture, and the differences can be absolutely vast. For example, if you're dealing in the Far East like China or Japan, you have to be very, very respectful of the very simple business card. In the West, it's just something that has our name and address on and a contact detail, and we just hand it over willy-nilly. In China and Japan, it is treated with great respect and deference. So when you actually receive a business card from a businessman in the Far East, it's best to take it in both hands, study it carefully, and bow respectfully when receiving it. And when passing your card across, treat it the same. Hand it with both hands and with a great deal of deference. And whatever you do, please do not repeat the mistake that I made when I first went to China, which is scribbling notes all over the business card. It's considered to be very, very disrespectful. For those who are in the West, you also would have noticed that culturally, tattoos have become a lot more acceptable in society than they were previously, say 20 years ago. That is not necessarily the case in a lot of other countries, especially somewhere like Japan, where tattoos are actually considered to be a sign of being part of the criminal culture. So if you don't want to be mistaken for a member of Yakuza, please don't show your tattoos in public. In Thailand, showing the soles of your feet to somebody is actually deemed to be very offensive. So if you're sat in a chair in a meeting and you're nice and comfortable, please, if you cross your legs, make sure that your feet are pointing to the ground and not the person you're meeting with. Also, very, very important to study the politics and the economy of countries that you are dealing with. You know, there's a lot of changes going on out there, and the world is becoming an increasingly more volatile place, not only economically, but also politically. 2 years ago, in 2013, Venezuela has actually banned currency trading. So it's almost impossible to be paid in US dollars by a Venezuelan company. And as their currency is basically decreasing in value on an almost daily basis, you don't want to be getting paid in the local currency. As I mentioned previously, Turkey, which has really had some very, very good economic success for the last decade, is now being pulled back by the unrest on its borders in Syria. And as we also know, in Eastern Europe, it's becoming increasingly more volatile dealing there, as Russia is showing more and more signs of wanting to move into its former CIS countries and taking back some of the land that it considers to be its own. Again, I work and I have worked for 27 years in commercial credit information, and I cannot stress this next slide enough. Please, when you're dealing with a prospect, if it's a new client or it's a new supplier, please do take the time to take a credit report on them. It's no good just looking at the, if you like, the company's website, because a company can put any information it wants on its website. You need to be able to verify the data that you get. You need to be, we have what we call the information challenge. In certain countries, particularly in Western Europe and countries like Singapore and India, the amount of financial information that is publicly available to anybody is actually very good. You can normally get at least a balance sheet, if not the profit and loss as well, on most limited liability companies in Western Europe, Scandinavia, Central Europe, and as I say previously, Singapore, India, and countries like that. And also for public quoted companies, that information tends to be available. However, private companies trading in large swathes of the world, including the USA, including Canada and Australia and the Middle East, private companies in these regions are not obliged to publish accounts. So you need to try and work with a reputable credit reference agency to get a company credit report that will help you to check that the company actually is registered, it is who they say they are, it is based where they say they're based, and that the people you're dealing with are actually important enough within the organisation to be able to sign contracts. The one thing you don't want to do is expend a lot of time and effort trading with a particular individual in a company to then find out he's actually only the janitor and he's got no signatory responsibility at all. And my heartfelt recommendation is do not give any credit to anybody until you've actually extended a full background check on them to ensure that they are who they say they are, where they say they are. We're seeing more and more legislation within the world about actually checking that the company is compliant, it's legal to be able to deal with them. We're seeing there are more and more watch lists appearing in countries like the USA, appearing in Europe. Effectively, the governments want to make sure that you're not dealing with people who are either involved in criminal or terrorist activity. So you want to see if the prospect that you're dealing with is appearing on your watch lists, such as OFAC, which is the Office of Foreign Assets Control, or indeed HMRC financial sanctions. In the US, they have the Patriots Act. So you need to make sure that you understand your own country's compliance when it comes to dealing with not only companies, but also countries. Understand your own country's anti-corruption legislation and make sure that you do not fall foul of it. And I would also recommend that you research the same legislation for any prospect country that you're actually selling into as well. As I say, there are a lot of laws out there, and ignorance is no defence in the eyes of the law. It's also very important when you're dealing on credit terms to assess the payment history of a company. Now, there are a couple of ways you can do this. The old-fashioned way was getting trade references, and you know what? That still works. It may be time-consuming, but there's no harm in actually requesting trade references on a business. And again, if you order a credit report from a reputable credit reference agency, they should be able to give you an idea of the payment culture of the company and also the country that you're selling into. One of the things that you have to be really, really careful of is that just because you're based in a country where maybe paying within 30 days is the norm, that doesn't necessarily make it the norm somewhere else. The obvious example in Europe is Italy, where 90 days is considered standard. Now, to an Englishman, that seems a long time. What is important to understand is that actually a lot of companies in Italy do actually tend to pay within the 90 days. Whereas in the UK we have 30-day terms and maybe average payment days in excess of 50. You also want to consider, when dealing abroad, protecting your interests. You know, a credit report is a great way of vetting a company at the outset and making sure that they're worth dealing with in the first place. But you also want to work on the theory that, you know, hopefully it won't, but it is possible that things could go wrong. So a couple of tools that are really worth considering are things like trade credit insurance. Effectively, what you can do is pay a premium to insure either your entire portfolio or just part of your export ledger. But it's really worth having a word with a local an insurance credit broker and seeing if this is worth a path worth pursuing for yourselves. And another favoured tool for companies trying to protect their interests is a letter of credit, where you get a signed document between both the exporter and the bank of the company with whom you're delivering the goods. Again, you have to be careful that you've got this completely watertight, but a letter of credit can be considered to be a very cost-effective and worthwhile tool to put in place for protecting your interests. And on the back of that, your contract is really where any litigation against a defaulting creditor will stand or fall. Make sure that your contract is watertight. Specify your payment terms. If the country that you're selling into has signed up for the late payment penalty, don't be afraid to put that in the contract. In the EU, for example, now we'll accept 8% as a standard on late payment. Don't be afraid to employ it. It's there for you to protect you. And also ensure that if the contract goes to arbitration, that it goes through your home country's legal system. I know every time I've done a contract in China, they've always wanted it to be under Chinese law in Beijing, and every time I've insisted as the supplier that it should be under UK law in the UK, and invariably we end up agreeing and compromising on it being UK law in Hong Kong. And also American companies are very, very strong on trying to get arbitration on their home turf. If it's your contract, feel free, feel strong, feel comfortable in pushing for it being your law, your legal system. And back to credit reference agencies again. Please excuse me for this, but it's my lifeblood, it's what I do, it's a passion of mine. So I'm going to come back on how we can help you again. As I mentioned, if you get a credit report from us, we can confirm the existence of the subject company and the authorised personnel that are allowed to sign for that company. We can give you an independent third-party recommendation on how much credit should be extended. And where available, we'll give you an insight into the subject company's payment experience. You know, if you're giving credit to a client, you want to make sure that he's going to be able to pay you. If you're working with a company abroad that's going to become part of your supply chain, you want to make sure that they are still going to be around. So an independent report from an agency like Graydon will be of great benefit to you. And as I mentioned here at the bottom, we'll also provide you an insight into the payment history, where possible, of the company. A lot of people have said to me over the years that they consider this to be an unnecessary overhead. I could not disagree more. Can you imagine how much time, effort and energy can be spent by your sales team trying to put together a deal, and then at the end of it, when they've got, it's almost come to contract stage now, they're all really excited, they've got this lovely big deal that's going to make their commission for the month. They come to the credit manager and say, can we go? They do a check and they turn around and say, really, really sorry, but the company's no good. Make sure you do your check right at the outset, and the cost of the report will far easily save you on the time that could be wasted on chasing after a deal that's never going to come off. If the credit report and the contract and working on letters of credit, etc., do not work and everything falls foul and you actually end up facing a bad debt, our recommendation is also have in place a very good international debt collector. At the end of the day, they will understand all the local sort of idiosyncrasies and nuances, and will have a very, very good chance of getting you your money back at a very low rate. I've noticed that over the years, the cost of international debt collection has come down massively, and there are a number of very, very, very good agencies out there in the world. So, to summarise, it's all about forward planning when you're dealing abroad. Understand the local culture. Make sure you understand the political situation. Check the company early. Verify they are who they say they are, where they say they are, and that you are dealing with people who can actually sign for the company. Check that you and they are compliant, that you're not falling foul of the laws that are there out there now. As I say, there's a lot of KYC, know your client laws that are out there that have to be done, and also things, as I say, like the Patriots Act. Put a credit report early in the process. Allow us to help you to see that the company is actually economically viable and is going to be able to pay you back for those goods that you're going to deliver to them. Make sure that your contract is watertight, that it covers everything that you want covered. Your payment terms are there. If it goes to arbitration, it's going to arbitration in your country. And if they are going to pay you late, hey, charge them. Get them to accept that you're going to be hitting them with an 8% charge. That may well focus their mind on paying you in terms. And don't forget the additional tools like credit insurance, letter of credit, and heaven forbid, debt collection agencies. So, if you've got any questions, or if you've had any questions, hopefully you've been sending them to info@ebsi.ie, and I'm quite happy to spend the next 20 minutes going through the questions with you.
Sean, can you hear me now?
We can indeed.
Oh, that's fantastic. That's great. Well, listen, that was a really, really interesting presentation. I have a couple of questions, if you don't mind me popping
Please,
some.
go ahead.
Yeah, just from my own side, what would be the cost of a credit check if I was to want to find out about the background of a potential partner?
That really will vary from country to country, and indeed whether or not you require the information online or a fresh investigation. And if I could just put a bit more explanation on that.
Yeah.
There are a number of very reputable credit reference agencies in the world who can offer you an online global solution. And by online, I mean that you can go on, search by a country, search for a company, and there will be a report that is readily available via the portal that can be downloaded immediately. That is likely to be in date enough for you to make a safe assessment on it. Now, where those countries are available, the reports tend to be very cost effective, and you could be paying as little as uh, in sterling, £35. So in euros, you're looking at about €45. In dollars, you're looking at about $55. If it's a fresh investigation is required, that would normally involve employing a third-party partner to conduct an interview with the subject company and to collate the information. So the cost there can vary, and it really will depend on the country, the speed of the service required, because normally you can get the same level of report but at an expedited speed. The faster you want it, the higher the cost. And again, those reports could start from as little as $50, could go up to as much as $200-300.
Okay, so even if you needed to send somebody to interview a company and so forth, those possibilities or facilities are there within your company?
Within our company, yeah, absolutely. And as I say, it's lovely that we've got the opportunity just to promote Graydon. But I would like to point out we're not the only agency out there. There's a world famous one in America that goes by the fourth and second initials of the alphabet, and they actually offer a good service as well.
Okay, that's fantastic. And just on the comment on LCs, you certainly have a good point about it being a useful tool, especially where I feel a credit rating agency can complement the use of LCs is where before you even kind of set out on the payment process, if you have already kind of done your background check on the potential buyer, it reduces the possibilities of fraud arising, because there are issues where there can be fraudulent LCs. But if you already know that the company is a bona fides company, the risk of that is significantly reduced.
I agree completely.
And so we just have one question now in terms of the international debt collectors. If we were to have a situation where we had a buyer in default, what companies could you recommend for international debt collection?
Okay, well, in my experience in the UK, there is a very, very well reputed company called Morton Smith. That is M for Michael, O for Oscar, R for Romeo, E for Echo, T for Tango, O for Oscar, N for November, Smith, SMITH. And they're based in London. They have an excellent reputation throughout Europe, and also one of the major credit insurers in the world, Atradius, has a very, very effective global international debt collection.
Yeah, Atradius I've heard of, certainly, and of course, who hasn't heard of Smith? Is such an important name out there.
Absolutely, except the way I pronounce it always sounds like it's got two F's in it.
So then there's just one other question that just came in, which was in terms of what added value can you provide, okay, over and above, for example, an exporter just checking through the buyer's Chamber of Commerce about their existence and bona fides?
Fantastic. That's a great question. Of course, the amount of public available data is becoming more and more vast as the years go by, and there's a lot more information that is available on the internet about the existence of companies at the local chamber or the national registry. the main problem with that is that it doesn't actually tell you anything about the creditworthiness of the business. It shows you the existence of the company, how long they've been going, and to be honest with you, as long as they're not being struck off or they're not seriously in default with the registry or the chamber with whom they're registered, there won't be any negative information about them. Now, working with a reputable credit reference agency like ourselves, and we in turn work with a hand-picked global network of partners, all of whom are the market leaders in their respective countries, what they've got is local experience. They will be in a better position to collate an idea of of payment experiences to show you whether or not the company is paying in time or not. They will also be able to do a check of the local courts to see if the company's actually been taken to court for default on payment. If I can use the UK as an example, Thomas, you can go on the Companies House website and that will show you, that the company's registered, who the directors are, the shareholders, etc. What it doesn't show you are the nationally recognised judgments against the company, which come from a separate public entity, which you do not have access to as a member of the public. Also, we do, you mentioned fraud earlier, and one of the things that Graydon does in its UK database is we realise there's been a lot of fraudulent activity over the last 20 years, and when I first started talking about this 10 years ago, we were quoting a figure of 6 billion a year lost to commercial fraud. My colleagues out selling in the UK are now talking, just 10 years on, figures in excess of 50, 60 billion a year lost to commercial fraudulent activity.
Wow, that's incredible.
And one of the things that Graydon does is, as an agency, we've looked at the historical, basically fraudulent companies, whether they've realised it or not, have left certain footprints behind. They all have certain common activity about them that when you look at it historically, you realise that you can employ those footprints and you can look for those footprints going forwards. And when we see those footprints in the activity of a company, it basically sort of like flags up certain concerns for us, and we can do some extra checking on the company. And if after that extra checking we're still not convinced that the company is totally bona fide, we can flag it as potentially a company to be wary of for these reasons. And we're not the only company doing that. So our partners throughout Europe, particularly, have got that same kind of expertise, and we're all moving away from being just credit information companies to try and be more sort of business insight. And we're using the tools that are now available to us to be able to predict the likelihood of a company being fraudulent. And that is something you will never get just from looking at the registry information.
Okay, very good. So you definitely have some very good opportunities to help exporters there. Just wondering, where would be your kind of strong areas of activity in terms, geographically speaking? Are you mainly UK based, or do you work with international companies as well?
Yeah, although we're actually ourselves based in the UK, we are considered to be one of the world's leading global credit reference agencies, and the reason for that is that, as I mentioned earlier, we've actually been working with this hand-picked network of partners for well over 20 years now. Graydon itself, we realised that the UK was a very, very competitive market for UK data. So one of the things that we looked at for trying to differentiate ourselves was actually becoming experts in the international arena. As I say, there's always been Dun & Bradstreet. They've been out there since 1839. We as a business date back to about 1888 at the Graydon Group. Okay. So we're over 125 years old now, and we've been working with these partners, and we've tried to be experts in international credit information for well over a generation now. We've got a specialist international customer service team who understand their market as well as anybody in our industry, And the agencies with whom, the partners with whom we're working, are all considered to be very highly reputable, if not market leaders in their given countries. So we're almost like a one-stop shop to this lovely global network of leading credit reference agencies.
Okay, fantastic. And so, if I was to ask you, what countries would you consider, so, shall we say, attractive or hot destinations for business development now at the moment? Would you have any recommendations?
Recommendations. Again, there's a lot of good press around Indonesia at the moment.
Hmm.
I believe that the Mexico could well be worth keeping an eye on. They for the first time in many years, they've sort of tried to break up the monopoly of the big oil producer there, and they are actually making sterling efforts to try and get hold of the please excuse me, the drug cartels there. And I think also the USA's with the plunging dollar at the moment. It's bad news for US exporters. It's fantastic news for people importing in America.
Yeah, that's for sure.
And so that's a good. And you know, I try to think what else. I mean, again, you can always some of the African countries again could still be worth having a look at as well.
Yeah, we have actually quite a few students in Nigeria, Kenya, Tanzania, and so forth. And those economies really do seem to be showing a lot of growth now.
Absolutely. I think one of the things to be very careful of when you're looking at certain countries is which of the countries have got economic growth that's based on either the export of manufactured goods or services, or those that are based on exporting raw material. Because
Yeah.
a lot of the countries that are suffering at the moment, like Australia, Chile, Russia, and to an extent Nigeria, they believe may well do, is where there's been a drop in the requirement for, in the case of Chile, copper, in the case of Russia, oil,
Yeah.
in the case of Nigeria, oil. If there's a drop in this global requirement, that could have an adverse effect on the economic development of these countries.
Yeah. No, that certainly is the case with Russia, by the looks of it. All right.
Oh, definitely.
Seems to be a lot of
I would say that the plunging oil prices have done far more to punish their economy than the sanctions ever would have.
Yeah. Well, that's fantastic. Listen, I really appreciate your time today. I think I'm just going to have another quick check to see if there's any further questions coming in. But if not, certainly that's been a very informative session, and we really do appreciate your time with us today. Let me see now. Do we have anything in from anybody else? No, that's it. That's it then. I guess not everyone else seems to be happy enough with the session. So our deepest thanks for your time today.
Thank you very much, Thomas. Thank you, ladies and gentlemen.
And have a great weekend. I know coming to the end of the week on a Friday evening, it's the last thing one wants to do is to start presenting to an audience, especially to a global audience. So really well done for your efforts today.
Thank you very much, Thomas. Have a lovely weekend, everybody.
You too. Have a great weekend.
Take care. Bye-bye.
Bye now. Bye-bye.